Welcome to the Lone Arranger Radio Show. I am your host, Bruce Woodburn, CrossCountry Mortgage, and I am the Lone Arranger. What a beautiful Sunday it is out here enjoying this weekend. You know, we're in December now. We're well into December, as a matter of fact, and just hitting the home stretch of the year. And you know what? I always really like to kind of recap everything when it comes to the real estate industry, what's going on with the market right now. Is it important to you? Because you may be out there right now and you may think, hey, I already own a home. What do I need to listen to a mortgage show? Well, this show is not only about how to save money when you're buying or selling real estate, but it gives you an idea of what's going on in the economic climate when it comes to real estate. And here's why that's important to you. Whether you own a home, you don't own a home, you've refinanced, you haven't refinanced, it doesn't matter. Here's why it's important to you. The entire, not only just the nation, but the entire world revolves around the American real estate economy. Think about it. If my industry is doing well, then you're probably doing pretty well as well. Okay? If I'm not doing so well, you're probably not doing as well either. You look at that when the real estate industry is bolstered, if it's strong, if it's got momentum, then people are buying cars, they're renovating their homes, they're buying clothes, they're spending money, consumer spending's way up, and that's why it's important that everyone understands what's going on in the real estate market. So let's talk a little bit about that. We're hitting the home stretch of the year right now, and you know, it's Sunday. It's the year's over. If you were wanting to buy a home right now and you weren't already in contract to buy a home, the chances on you closing by the end of the year are highly unlikely. Highly unlikely. So, although not impossible, but highly unlikely. So if you did want to close by the end of the year and you're in contract or you wanted to refinance between now and the end of the year, call me immediately so we can get the process started, and we'll do the best we can to make sure that we can wrap it up. But even appraisals are taking 2 to 3 weeks right now. I'm getting some of them in a week, but those type of things can delay the process. I can process a loan quickly, but I've got to rely on ancillaries. And boy, I'm going to tell you, come December, you got people, title companies on vacation, appraisers on vacation, surveyors are on vacation, all of the ancillaries that are necessary to be able to complete and close a loan for you. But let's forget about that. And let's talk about what is going on in the market. What are rates doing? So here's the thing. Have you noticed that interest rates are starting to tick back up? I know you've been hearing me tell you every week for years what the market's doing. And over the last year and a half, I've said, keep an eye on rates. They're going to go up. Now, I'm going to tell you something. I predicted that they were going to go up sooner than they actually did. They stayed lower longer. And I think people got real comfortable with that. And you start to see people think it's the norm. It's not the norm. Listen, a 3% interest rate is not the norm. A 2.5% interest rate is not the norm. It's the exception. We're starting to move into the norm. And what is going to drive rates up and what has driven rates up? Well, you have to remember that interest rates on mortgages are not tied to prime rate. However, prime rate and other economic and monetary policies can tend to influence it somewhat. For instance, if rates are going to go up, what would cause them to go up? Well, there's two things. The bond market could deteriorate, meaning that institutional money is shifting from equities, stocks, into bonds, okay? If that's what's happening, then you're going to see interest rates improve. If they're moving out of bonds and into equities, you're likely going to see interest rates decline or increase in price. Now, we've seen a lot of ups and downs recently, and there's been a couple of things that have impacted that have caused the stock market and the bond market to go in the same direction. That's not usually the way things happen. Usually it's a teeter-totter effect. But lately, you're seeing stocks bolsters and interest rates are starting to deteriorate. What's causing interest rates to deteriorate or get worse in layman terms? Well, the federal government has been the key to keeping interest rates down. It's not the economy. It's the federal government has been buying mortgage-backed securities. So if the feds are buying mortgage-backed securities, they've been artificially keeping interest rates at an all-time low. Many of you already know that. Those of you that don't know that, here's what's happening. So the federal government, if you've been watching Powell, he's been out there toting that they are going to what's called taper, meaning they're going to start reducing the amount of mortgage-backed securities. So they were buying $10 billion a month. They're down to less than $4 billion a month. And they said that they're going to completely quit buying mortgage-backed securities at least by the first quarter of 2022. Well, it doesn't take them to stop buying mortgage-backed securities to start driving rates up. All they have to do is say that they're going to do it, and it already starts to happen. And that's why you've seen interest rates start to pop up. But you're also seeing the stock market rallying. Now, we had a few bad days here and there. We've had a few good days. It's been, quite frankly, a ride in a stagecoach. But you've seen some ups and downs. But you're seeing the stock market still continue to climb. And as the stock market's climbing, people are pulling out of bonds. Why would people go from bonds to stocks? Bonds are a safe haven. So when the market's unstable, then people go into bonds, or institutional money shifts their money into bonds because they can protect the asset. They don't make a lot of money on them, but they keep from losing money. And that's what's driving the market up and down. So you're starting to see interest rates go up. Now let's talk about interest rates. What's going on? And is it still the right time to buy, or did we miss the boat? So first we're going to talk about refinances. Refinance loans have actually really started to go up. But I wanted to tell you about one of my favorite things to do right now to help the most amount of people. But it doesn't fit all. Well, nothing in my business is one size fits all. However, if you've got equity in your property and you don't need to cash out money, in other words, to consolidate or do home improvements, you just want to refinance the balance, but you want me to include your closing costs and prepaids in it so there's no money out of pocket. That's called a no cash out refinance. And I've got a bargain on 15-year no cash out refinances. In other words, your credit score typically impacts your rate on almost every mortgage, but it won't impact your rate so much on a 15-year no cash out. Matter of fact, I'll just tell you, this is not a rate quote, because if I give rate quotes, I got to give a lot of disclaimer on this, but I will tell you a story, and that is a story about a client that I talked to this week. It's a past client. They called me. Their loan ended up getting sold. I closed it about 4 years ago, got sold, and they went to a company. I won't mention any names, but it's a bank, and it starts with a W. And they called that bank to refinance, and they got a quote from the bank. And I looked at that, and I went, I wouldn't do that loan. I would not recommend you do that, even though the interest rate's better than what you already have. Here's what I would recommend you do. And I quoted them. This guy, by the way, this guy's got a 629 credit score. That is not a good score, guys. If you think that your scores are good at 629, that is way low. Your average credit score is 725. That's an average score. So 629, not good, okay? However, I was able to secure a 15-year fixed rate loan for them with that credit score, no cash out refi. They were at about 65, 75% loan to value. Secured that rate at 2.625. You heard me. 2.625% for that client. That is not a rate quote. I'm just telling you what I did for them. If you would like me to give you a rate quote, all you got to do is stop the car, pull the lawnmower over, park the vacuum cleaner, put the laundry down, and write this number down, or call me right now. If you call me right now or text me right now, at least you'll have my number saved. 407-706-3313. That's 407-706-3313. Or go directly to my website at webringyouhome.com. That's webringyouhome.com. You can remember that website. It's easy. We bring you home. Where are we going to bring you? We're going to bring you home. webringyouhome.com. I want to help you save money. Now, I'm taking this person that's been into their mortgage for 4 years, paying 4.875% interest rate to a 2.625% interest rate, and knocking off, 10, 13 years off their mortgage? Do you realize how much money they're going to save? Now, their payment went up about $250 a month, but they're saving $300,000 over the life of the mortgage. That's what I like doing. So if you're interested and you haven't refinanced yet, or maybe you want to pull some money out to consolidate, don't wait any longer, my friends. Listen to me now. It's not a sales pitch. I'm telling you the truth. Rates are going up. Stop. Write my number down. 407-706-3313. All right. So that's about refinances. Let's talk about purchases. Because I'm getting some people that are going, you know what? I really think I'm going to hold off on buying because prices just seem to be at an all-time high. They seem to be a little outrageous. Okay, let's put this all in perspective. You're right. Prices are at an all-time high. You're right. They may seem outrageous. Here's where you want to really put things in perspective. I don't care what time frame you look at in the past, but prices of homes were always cheaper. They did not go down. They went down. If you're listening to the show, I'll bet you they went down once in your lifetime. And that was in 2008 and 2009. Maybe it stretched into 2010, then started to recover. But we started to pick up at the end of 2009. 2008 and 9 were tough years. We lost some ground. Why did that happen? And is it going to happen again? Here's why it happened. It happened because of my industry. You heard me. I'm not afraid to say it. It was the mortgage industry that put this whole country, and not only our country, but many other countries that were buying our mortgage-backed securities, bogus securities that were sold by Countrywide, which is not to be confused with CrossCountry Mortgage. I'm CrossCountry Mortgage, nothing to do with Countrywide whatsoever. But you had Merrill Lynch and Bank of America and Countrywide packaging up these subprime loans and selling them off like they were golden and they were just junk. People were getting 100% financing. They had lousy credit. They weren't verifying their income. They were making up their income. I mean, you had people working in McDonald's flipping burgers, making $7 an hour that were buying $350,000 homes. And then they think they could flip them because their friend did it and make money. And then the truth came out and they weren't really performing transactions whatsoever. And that put us into tailspin. And that's what caused the recession. Now, why isn't that going to happen? Because we have what's called prudent underwriting. At least that's my terminology for it. Prudent underwriting, meaning it has to make sense. You have to have a credit score that meets guidelines. You have to fit within a debt-to-income ratio that fits guidelines. And you have to have enough cash to put into the transaction or equity in a refinance. It just makes sense. Now, you want me to look at this? I'm going to show you why you should buy and don't wait any longer. When we come back from the next break, I'm going to give you an illustration of how much money you're leaving on the table by waiting. Don't turn the channel. Don't turn me off. I got some very important things I want to share with you, and I think that you're going to find it impactful, not only for you, but for your friends and family. I'll be back in 5 minutes with more of the Lone Ranger Radio Show with Bruce Woodburn, CrossCountry Mortgage, 407-706-3313, or webringyouhome.com. That's webringyouhome.com. I'll be back in 5.